Good evening, traders. Welcome to our session this evening. My name is Mathew. I'll be taking you through multi-time frame analysis in trading. If you have any questions, feel free to send over on the chats, and we will look at it towards the end of this session. So we want to focus on a brief introduction of top-down analysis, which is also the same as multi-time frame analysis or multiple time frame analysis. The common time frame combinations for different trading styles that you can use, and also sample strategy or approaches with multi-time frame analysis. So top-down analysis or multi-time frame analysis, it almost means the same, but a little bit of a difference. So multi-time frame, just like the term itself, is where you're analyzing the market across more than one time frame because you want to get a broad view. For instance, you might want to look at the daily perspective or the daily trend, then you move lower to a 4-hour time frame and then settle down to 1 hour, where you're going to look for clues on where you can enter your trades. When you talk about top-down analysis, is where you specifically start from a higher time frame and then cascade down to lower time frames to refine your trade idea based on what you've gotten on a higher time frame. So when you're talking about top-down analysis, it's where you're looking at various time frames from higher time frame, but then you're also looking at multiple time frames. So you cannot talk about top-down analysis without actually looking at multiple time frames. That's why the concept is similar. So what are the common time frames combinations that you can do, and what different trading styles suits them? So the higher time frame for swing trading, you can consider weekly and daily, and then trader moves lower to 4 hours to find suitable trade entries. Sorry, for swing trading, remember, it's where you're opening trades that are going to run for several days. So you want to see a bigger perspective from weekly, maybe weekly key levels, and then supported by daily levels as well, and then entry confirmations on 4 hours. That one is for traders who want to hold their positions for several days, maybe from Tuesday, Wednesday, Thursday, something like that, or Monday, Tuesday, Wednesday, but mostly within a week, several days within a week. That is swing trading. The next combination is where you have a daily and 4 hour and then move lower to 1 hour. This is day trading, and a day trader is someone who is looking for positions that are not really going to last more than 24 hours, let's say that. So this is a trader is going to look for opportunities on a daily chart, find levels on daily chart, maybe the trend on a daily chart, and then move to refine lower on a 4 hours. After that, find entry confirmations on 1 hour. And once the trade flows for or runs for several hours within the day, then closes the position. So we have traders who will also focus on lower time frames. Remember, so long as you're holding trades within the day and not letting them run beyond 24 hours, then that is day trading. But there's a level where traders are opening positions. The trader opens position and closes them within a very short time. That's what we're calling scalping. And this type of a trader will have to we usually look at a market on 1 hour, let's say, for example, because you're looking for much faster movements within a shorter time. So then 1 hour becomes a higher time frame, then execution or confirmations on 15 minutes, 5 minutes, and even 1 minute. sometimes. So if you look at this presentation here, or this screen, what we have is analysis based on several time frames. The trader is not looking at one time frame and making decisions on the same time frame, but rather looking at one time frame, going down to another one, and in the event where you have a higher time frame, then leading to a lower time frame, then finally executing on a lower time frame, that's when it's top-down analysis. And then because it's multiple time frames, then this one becomes a multi-time frame analysis. Remember, it's always important to backtest the time frame combinations for some time before deciding to use it in your trading strategy. Just like any other trading strategy, it's always good to backtest what you want to transition to. And with it, you just want to move to chart examples. If you have any questions, feel free to ask. Hey, Kebubi, good to see you. I think this is Brian. Good to see you. 24, Lucas. All right, welcome as well. Let's discuss much about this trading approach. All right, so with that, let me just go straight to the charts, but maybe let me mention that top-down analysis is an approach that can work with several trading strategies. The idea here is try to find the perspective or the bigger picture from a higher time frame, then refine it moving lower till you find better entries on lower time frames. The advantage is you have a wide perspective of the market, you have a bigger picture of the market, you're avoiding noise from lower time frames. And then once you get your entry on the lower time frames, you're likely to find better risk reward setups. So let me move straight to, I'll give 2 examples of strategies that you can use in top-down analysis and as well multi-time frame analysis, since they almost mean the same. So I'll give one example with an indicator so that you get the affirmation that even indicators can work with this strategy. So with me here, I just want to look at a strategy which you have previously looked at before, but in this case, to serve the evidence for top-down analysis with indicators. Now, this is where we're going to apply relative strength index. Remember, relative strength index, this is the indicator on the lower part. It shows where you have the downward momentum increasing or you have the upward momentum increasing. In this case, we're going to use the 50% level, not the usual 80. Yeah, not the usual overbought, oversold levels. So in this case, we want to just see price above 50, it's turning bullish. Price below 50 is turning bearish. And we want to observe that one from a higher time frame. So in this case, I'm going to ignore the upper part, which is the chart area. And I want to focus on the relative strength index. And the key areas I'm interested in is at the levels where the RSI, or relative strength index, is crossing lower below 50, right? And when the RSI also is crossing above the 50 level, because that's what it means it's turning bullish or bearish, or the downward momentum is increasing or the upward momentum is increasing. I've made the font much bigger so we can see the chart. I want to highlight those places. And first of all, I want to make sure I'm on 4 hours. I want to use 4 hours as my higher time frame, then move lower to 30 minutes. That is one of the examples which we saw on the charts, on the presentation, sorry, where we have our higher time frame as 4 hours, then we move to a lower time frame which is 30 minutes. That's going to translate to day trading. All right. So here we have, I want us first to mark the levels where we had the price. Oh, sorry, not the price, the RSI falling below the 30 or moving, falling below the 50 or moving above the 50. So we'll mark all those sessions. It's more of back testing. We see whether we could have gotten those positions and yeah, how it's likely applicable. So all these levels are marking, it's on 4 hours. We want to see whether you could have gotten some better opportunities for selling or even buying. So here we have a few, maybe one last. And then from this session, now since we've identified them on 4 hours, I want us now to switch to 30 minutes. And of the 30 minutes, we're going to consider the Bollinger Bands. All right. And as well, if you look at those levels that we've marked on the RSI, if you consider even on 4 hours, you can see the price either turned bullish, yeah, or turned bearish at those specific areas. Okay, so I want to move to 30 minutes now that I have marked the RSI on 4 hours. Remember, I just marked the RSI on 4 hours. Let me highlight with an object to make it much easier. So at that point, realize the RSI crossed to the upside, where I've marked with green. This level RSI moved to the downside, turned bearish a little bit, didn't last longer, turned bullish again. This point turned bearish. And you can have as many examples as possible, but I've just marked a few so we can use them to see how I could have applied all these levels. So this is on 4 hours, like you can see. Now let's move to the 30 minutes, and we want to make sure that the levels align. Now on the 30 minutes, we want to consider, on 30 minutes, we want to consider the Bollinger Bands. We'll no longer be looking at RSI, but we will align, we'll make sure that this level which we marked on the 4 hours aligns properly with that point or that part of the chart on 15 minutes. And this is the level which we're talking about on the 30 minutes as well. Let me mark all those levels on the 30 minutes where we had marked previously from the 4 hours. We see whether we could have gotten opportunities. Let me spot all of them where they were. Okay, see whether you could have gotten opportunities. Price went lower. Let me mark here. Put an object. I will zoom once we've done marking those levels, right? There is that area around there. These didn't last long anyway, but we will see. Not all of them might that are going to work. So if you align this one, then we have here, and the other one, if you align this one up here, we have this level. I don't know whether we can do it this way. I think this one works much better. Remember, for any strategy, there's no one strategy which works 100%. Some will not give you the results which you're expecting, but a little bit might suffer a little bit of losses. But you also want to make sure that any strategy which you use at least gives you or pans out better, or pans out most of the times than it actually loses. So I'm marking all those levels that we had this level, this RSI level where we marked the line, aligning with 30 minutes, and then we assess them little by little. And we want to see whether could we actually have gotten any profit if, as a trader, you were able to patiently wait for those levels and mark them and get your trades. I think that one was our last one. I'll go all the way to the where we started, and then we start seeing the opportunities we could have gotten there. I think we can start from here. Now, what we have down here is from 4 hours. From 4 hours, there is this level here where we had the RSI crossing above. And then if we go back to 30 minutes at that level, then what we see is that level. Let's look for it. What we see is the price was in a consolidation in the Bollinger Bands. You want to consider a scenario where the price on the 30 minutes maintains above the middle line of the Bollinger Bands, which is usually a 20 simple moving average. If it maintains above, right, like test that line, maintains above, then on a bullish move, in this case, someone could have gotten around several pips to around 44 pips. Let me put period separators because this is for day trading. We see how many pips someone could have clocked within a day or could have backed within a day. So yeah, if someone gotten that trade at around this session, because the price went lower, then pulled back again at this area, there was a chance of up to 25 to 27 pips, right, towards the end of the day. That is one. Moving ahead, let's see what could have happened in this case. If you look here, we've marked on the lower part. That is where we had the RSI moving below the 50 level, exactly at that level. If you can check the RSI. If we consider the 30 minutes at the top, again, we want to see the bearish move being confirmed. And for the bearish move to be confirmed on 30 minutes, then we want to check for a possible price action below the middle part or on the lower band. So in this case, it was quite clear. The price was quite much on the lower band, tested that mid line, which is usually a simple moving average 20, pulled down again to the downside. That could have served as a entry to a possible, that is 80 pips within the day. So this one was quite nice. Let's move again to the next next level. You see, these trades, in as much as we are calling them day trading approach, remember, traders can hold them because once that opportunity comes in, then sometimes it might flow for several days. Okay, so you might decide to hold them as well. That's the advantage of basing your trades from a higher time frame, because you've got a bigger view of the market, and there's an opportunity of holding. One thing I would want to advise against is stick to the rules. For example, this one seems like a confirmation for a buy, which worked for this time. But again, remember, you cannot consider the RSI for 30 minutes and enter the trade still with the Bollinger Bands for 30 minutes. You need to get that signal from a higher time frame. So the other example is a bearish one. In this case, I used 2 lines, both at the top and at the on the RSI on the 4 hours, and also with the Bollinger Bands. Look at this case; it's very clear as well. On the lower side, you can see this line which we got from the 4 hours RSI. The RSI went lower than 50, confirming a bearish momentum, right? And then if you go to the 30 minutes, then you look at the price action. it's been subdued lower below the middle line or just on the lower band. And if you consider that one, then give some very nice entry to the downside. That one has been prevailing for quite some time. If someone got an entry at this level, yeah, and then this means that was around for this within the same day, 80 pips. It's really interesting. And this is GBP JPY. That's why you're getting such big moves. Yeah, sometimes this is one of the instruments that traders mostly call the beast, because it really pulls very big moves. Again, like I mentioned, when you get these trades, you can try to scale out, because you see most of the times the movement or the trend keeps on flowing for quite some time. Yeah, maybe once you get your trades here, then you can go, once you get your entries on lower time frames, you can try go to the 4 hours and keep holding your trade, but always make sure to pay yourself. You can just get half of your trades out and then you leave the rest to run. Remember that it's not meant to work all the time. We are speculating and we're not predicting. We're not prophesying the market. Sorry, we are predicting, we are speculating, but we're not prophesying the market. So anytime it's not working for you, get out fast. Now, this is an example with an indicator. It's a Bollinger Band and RSI, 4 hours and 30 minutes like we had here. Now, I want to move to another approach now where we're looking at key levels. And this time around, I want to do this analysis over several time frames. I want to look at daily. I can as well go back to weekly, go up to, I can move to from weekly to daily, or even move from daily to weekly, right? This is not really a multi-time, it's not really a top-down analysis, but it's more of considering multiple time frames. It can be higher or lower, but the entry should be lower. And the lower time frame is always a refinement of the higher time frame levels. I don't know whether that one makes sense. Right. So let's go right in. And in this case, let's consider Euro USD. So with Euro USD, I want us to look at key levels. When I talk of key levels, these are resistance areas or areas of support which have been there. These levels, they work if you get them from higher time frames and take time to wait for them get confirmed. So let's go to daily. From a daily perspective, if you want to get those levels much easily, just use the line chart. Yeah, use the line chart, and what you want to check is a possible area of support turning into a resistance. Okay, or you can even just do the candlesticks and you will see a possible area of support turning into resistance. And because it's a very high time frame, a support level or a resistance level of a high time frame is as strong as you would want to describe it. Very, very strong. It might be tested twice, it might be used twice, because those are areas of interest or points of interest that are really, really very important before they are completely exhausted. So in this case, go to daily. And in this case here, for example, you have a support level turning to resistance. And again, the third time it turned to a resistance, it gave into a very strong movement to the downside. Again, at this level here, we have a support area which turned to resistance. And the third time, price just touched that level, pushed to the downside, and gave in to a very strong downward move. All right. So once you find these key levels on a daily time frame, you might also want to, it is really important to look at other strong areas. Like in this case, this is Euro USD on daily. The price tested the support and did not break it. That's where it is bouncing from. And this level is really, really very strong. Might be a low point that the price struggles over time. Might be. Okay, so once you get this area, then you might want to move to lower time frame for just the common ways of trading where the price bounces on support. Once the price breaks a level, then on retesting it, okay, it continues. Those old approaches that everyone wants to avoid, say work if you know when to look, where to look for them, and have the patience. So we have a very strong support level here on daily, which was previously held in June, and the price is really facing a lot of difficulties. But then if we focus a little bit, you realize that we had a support as well, which was broken, and now it's likely to turn into a resistance. So that's what we're waiting for, most likely. But because it's touched on a strong support level, then it might break to the upside, and breaking on the upside, then we'll be waiting for a retest. But then all that, we will want to confirm it on a much lower time frame, like 4 hours. So you go to a lower time frame, like 4 hours, and whenever you go down, it really becomes very much refined. And let me not use this current level that we're looking at here, okay, where you have 2 support levels and price seems to be rushing to this area. We don't know whether it's gonna get resistance there or it's going to break. And as something else, I would want to advise traders that always consider these levels as zones, sometimes not really very specific as zones. But if you know how to use order blocks as well, you can have them, in this case, help you to find the best entries. But remember, we're on a support level from daily time frame. So this level is going to be very strong. We're most likely looking for a little bit further upside, but must react on this level. So on 4 hours, that's what we have. So this is the assumption. And this is what we're looking at. If you check on the left, here we're looking at several aspects of trading. And for you to apply this multi-time frame analysis, you need to have quite some content. So when I'm looking at the left side, I see there's some imbalance as well, right? There is a level here that seems there was a lot of selling that might have left some gaps in the market. So with this one also supports a likelihood of the price pushing much higher up to this zone, maybe to fill this gap, right? So if you go to a lower time frame and with that idea in mind, you might be looking for a little bit of buying up to this zone as you're waiting for the price to tap this zone. Might be looking for buying opportunities meanwhile. And we're going down to lower time frame, like let's say 1 hour. So when you go to 1 hour, then you might want to pull another approach. And in this case, you might want to remember you've seen the levels. So in this case, you might want to use even moving averages, right? I know many people don't like that, but you might want to insert a moving average in this case. And with a moving average, it might give you something like break of that level or breakout, then retest, confirmation to the upside up until it hits that level, right? If that one is not working for you, then you might want to just look at breakouts and you know where your targets are. It is this level here up until you wait and see whether it's going to turn into resistance. If you do not want to do that, then you can patiently wait for these levels to be hit, because if you assess here, it's just like a 1-day move. So another 1 day to wait for this level to be tested is not something much to ask for a trader who really knows what patience means in trading. And in this case, we're just moving down lower to 1 hour. That's what we're waiting for. If you still want to push for a trade up to that level, you might go even to lower time frames and a little bit of pullback and entry to the upside, a little bit of pullback, entry to the upside up until the price hits this level. And at that point, you want to wait up until you find a reversal pattern from that session to the downside. If the level is confirmed as resistance. And that's when you can use the key levels. Okay, from a very high time frame, move lower. Okay, and also always look for gaps, inefficiencies on the left side for the key levels. So that is what I had for today. Unless you have questions, one thing I'd want to mention is always look at higher time frames. Yeah, if it's daily, then move to a lower time frame, and sometimes be patient to get the entries. Also, have a wider seek for wider knowledge about other aspects you can consider, because you're looking for any form of signal from any higher time frame or lower time frame, because you want to find the best entry in the market. And I have a question from Isaac. You're asking whether you can download this version to watch later. That's a good question, Isaac. Actually, this session, once it's recorded, once we're done presenting, it's recorded and you can find it on our YouTube. We have got several others which are recorded on YouTube, and you can always find them. Okay. It's always good also, it's a good doing multi-time frame analysis. Consider market structure, where you know the price will always aim to the next highest level, if it's from a support, or to the next lowest level. And you can take it to lower time frames, knowing where you're targeting. All right. Okay, any other question? If there's any other question, I'll be waiting to answer. If there's any other question, I'll be waiting to answer. Maybe something else. You can look for another one example. AUD yen. I don't know whether you find examples here, but let's say, for example, you have 4 hours and you're looking at a reversal pattern. Let me remove the moving average. Looking at a reversal pattern, and that reversal pattern comes up on a higher time frame. So then what can you do? You can use the higher time frame reversal pattern and then move lower. Like, for example, here you have 1 hour, so you can get the reversal pattern on 1 hour, and then it move lower and find a possible reversal as well. A possible confirmation. I don't know whether I've used the right English there. Let me mark that part, and then I want to move. This is a reversal pattern we have here. Okay, so we have an engulfing candlestick to the downside. So if you go, for example, to 30 minutes, I want to see whether there could have been a signal or a confirmation for a further downside at that point. I don't know whether I will, let me try, find that level which you've marked. Yeah, here we are. So around such sections, you will not lack common patterns. And like I said before, you need to have a much wider knowledge about these markets to use the multi-time frame analysis. Like in this case, if I just refine this level, you can see there was a little bit of a consolidation here where the price broke to the downside. And then after breaking to the downside, let me put a channel. Price broke to the downside. After breaking to the downside, then we have a little bit of a retest before the price really unleashed a big strong bearish momentum. I want to remove this and then show you that level which you're talking about, or that occurrence which you're talking about. Here we are. We can as well move to 15 minutes now. Go to 15 minutes. Look at it. Look at that. You see, 1 touch, 2 touches, and we can even refine this one further. Look at that. And this is coming from the 4 our reversal pattern. And here you have 1 touch, 2 touches, price caught up within a range. We had a breakout at this level here. I don't know whether I can get an arrow to show you the initial breakout, which will I get the arrow lines? Yes. So we had this initial breakout to the downside up to that level, and then a little bit of pullback. All right, the concepts that everyone says don't work. A pullback to this area. Once we have this retest, you consider this one as a retest, fails to break above this area, and then you have a continuation to the downside. And this trade, if you try to follow, it was such a long stretch of a bearish move, right? So from a higher time frame, 4 hours, where we had a reversal, engulfing candlestick, go lower to look for further patterns that confirm that. And with those few examples, I think I would wish to call it a session. I don't see as many questions as possible. For the ones who want to see these sessions, look at it much more, just check on our YouTube channel. We'll always have it there for you to review at your own convenience. But if you want us to review these concepts one-on-one, visit us in our physical offices or in our academies, where we teach these ones or these concepts daily. We discuss them daily and walk you through one-on-one. Thank you so much, traders, ladies and gentlemen. See you next time when we have such an event again. Thank you. Good evening.